Welcome to TradeTheNBA.com. John's report is for the 30th, and while we're going to end the year, should be to the upside, but we'll see. Upside in general, simply because where we started from the year. In fact, we should just squeeze the chart back and take a look, because it's worth noting. A lot of people were, I don't know if they were pessimistic or just not paying attention to history, whatever. They couldn't see the potential of what was taking place, and despite the idea of potential market upsets, whatever, none of it materialized. And so we can go right here to the beginning of the year, which is the 4th right there. Let's go ahead and just slide that up to it right there. Give our opening was 2007. So from 2007, we end up 2250, roughly, plus or minus, depending on where we're at for the end of the day, which is fine. We can see that we had the tiny little DOC spread that caused us to go below the yellow line, but we did not dip until yesterday to the green line. And once we get to the green line, that was a nice measure of turnaround, because then you had yellow going above as resistance at the top, but white as a nice turnaround, which was at 2243 range. And we've elevated right up above that. So fairly decent from a daily standpoint. The NQ is actually a little bit better because it's already back above its ABM yellow, or right at it. And the Dow needed to come back a little bit, and we needed to see some of this fill back in under rotation as a normal part of closing out a year. The interesting one here is we had that huge support of the euro right at that. I mean, they were at the bottom, and they've forced it up, and then that forced a lot of short covering, which, gosh, from an intraday, you should see that spike was like whoosh. Of course, it backfilled all that positive extreme, which you're likely to do, but needless to say, it means that central banks have it under control. No fear, and that should be a bonus for the market. Now we're getting TLT starting to rise all the way back up. Look at that, it's been a steady increase in it. So you got to wonder if there's some protection for banks going on in there. USO, right at its peaks, no surprise with that as well. We're still expecting that there's going to be some headwinds for oil going forward, but any supply reduction and you get any improvement in the economy, and boy, look out. Now we had this long, steady build up here, and we've gone from negative like 30 something to the low 20s now, so we're right at the precipice of a pretty reasonable breakout. I had anything above 109 as the opportunity to start taking a move to the upside. It's overbought a little bit right here, but there have been a lot of central banks accumulating gold, and they've been trying to trash it for a while. You're always going to have that as a lagging thing, so it's always worth adding a little bit of that back into a portfolio just to have physical versus non-physical. Well, I prefer physical myself, simply because we're seeing a situation where cash is going to be under assault going forward here as we move to an electronic version of things. India is the great experiment, and the U.S. has moved quite a bit towards it, just with all of the convenience that they've made for banking and things. I mean, you don't even need to get statements mailed anymore. Moving to an electronic environment, and that's what they want because it allows for unlimited inflation of currency. So after the long decline, reaching all those full targets in there, we started to see a rise in the DOC red. We ended up with our oranges pivoting at the same time, so we ended up with those buy signals that were happening. Let me just click right about there. It was around 2045, so about the same as what we were talking about from the ABM yellow. And got to the long short algo, and boom, popped just above it. Probably be sending out indicators Saturday or Sunday, so that you'll have them to start the year before futures in Hong Kong. I wanted to get a couple little adjustments done beforehand now that my head is less exploded from this lovely winter cold, which has finally subsided. We do have some positive extremes back there, so it looks like we're going to come back and revisit those peaks unless it can ease off a little bit. It's already taken a little bit off of it as we speak. And that's pre-market. So any retrace, we're likely to come back to that upper point again, simply to fill it back in place. So that's the state of things. The year was, I thought, pretty effective for us. I mean, we were right on the understanding of how things would go from the election on down, and we knew that there was going to be a strong push to the higher side for the end of the year. So, all things being equal, not just historical fact, but general readings kept us on the right side of things, which is always good. Can't complain about that. I'm looking for some more excitement as we get more defined in our 5K chart so that everything else becomes just irrelevant, that we're able to be at the base of the market and know where we're headed. So I think those are all exciting things, especially as they move towards automated features. As always, though, continue to look for me on the Skype chat. I will send out renewal notices for anyone who hasn't already renewed, and you'll be all set to rock and roll for the new year. Looking forward to it. Should be a good one. As always, trade well.